This is the Uptick Newswire Stock Day podcast, sponsored by InvestorsHangout.com and Equities.com. Subscribe to us on iTunes and YouTube to stay up to date on penny stock news and interviews, public information on OTC, pink sheets, and microcap stocks from around the world. With your host, Everett Jolly.
On today's show, I'm bringing back a returning guest. I guess I could say that, but he hasn't been on my show for about a year. This is one of the hardest guys to get a hold of in showbiz. No pun intended. Alpine 4 Technologies Ltd. You can find them on the OTCQB under the ticker symbol ALPP. Let me give you some metrics before I introduce the CEO of the company. Their market cap's only $1.3 million. In 2016, they had revenues around $7 million. 2017, they had revenues around $10 million. First three quarters of 2018, they're already above $13 million. Third quarter revenues were up 115% compared to 2017. I'd like to introduce the CEO of the company, Mr. Kent Wilson. Kent, welcome to the show.
Everett, thanks again for having me on the show, and it's always a pleasure being on Uptick.
Manufacturing, energy, services, fabrication, technologies, and industries that support these market segments. That's what you guys are in. In layman's terms, explain that to myself and my listeners. Give us a little bit about statement, how you guys make your money, and then I want to get into the Q&A.
Yeah. Alpine 4 is a uniquely positioned, fast-growing holding company. And we talked a little bit about this, I think it was actually a year ago, not 2 years ago, but a year ago on your show. And we look at companies when we're trying to buy them a little bit differently. And I know that in the past, it's been a little bit harder I would just say our competitors have a little bit harder time articulating it, but we've taken a step further. Our business model is really geared around identifying companies that fit into one of three categories. You're either a driver, a stabilizer, or a facilitator. And really what that means is a driver company is a company that's like our subsidiary called Altea. It's in the connected car industry. It resides in a $9 billion market opportunity for us. We are far enough along where we are mature in the market space, but it's a growing market space. And we think we'll grab 1% to 2% of that market over the next 3 to 5 years. So that's a driver company, something that has a lot of opportunity, if you will, fairly good barriers to market, and as a company that's hedged itself to take a large opportunity, potential opportunity in that market. A stabilizer, so it falls over two things, stabilizers and facilitators. Stabilizers are your quintessential kind of private equity buy, stable revenue, been along a long time. Customers are the sticky customer base. And it's important when you have a driver company that most of the time we're not buying Apple, right? We're buying something that's relatively new, doesn't have a lot of structure to it. So you need a stabilizer company to really help guide them along. And a facilitator buy is that synergistic glue that binds our whole business model together. And what I mean by that, Quality Circuit Assembly is a company that manufactures circuit boards and wire harnesses, and they are a facilitator company. They actually manufacture our connected car company's brake product and our telematics piece. And what it's done is, because with Quality Circuit Assembly being a facilitator, we own the manufacturing cycle and the engineering cycle. And it's allowed a competitive advantage to Altea in the way that we can get to market in 90 days, where our competitors, if there's any kind of design change, It takes them almost a year. And so that's the competitive advantage that a facilitator company makes up in our driver stabilizer facilitator business model. And it's, when you look at the market segment of each of what we do, the DSF model, why it's revolutionary, is our greatest competitive advantage is being in a highly diversified business structure, but also synergistically oriented. And so what do I mean by that? Here's another great example. Quality Circuit Assembly has a very large customer. They're in the 3D printing space. They just received about $400 million in a third round of funding, very well capitalized, poised to grab 90% of the 3D printing market over the next 10 years. They are one of Quality Circuit Assembly's customers, but it's a highly competitive market. So how do we keep out our competition? Well, Quality Circuit's doing their circuit boards and wire harnesses, But we realized because of the relationship, they had a need for so much more. They needed internal CNC parts, they needed sheet metal. So we looked to our sister company, American Precision Fabricators, to facilitate a larger buy order within that customer. And what has it done? It allowed the customer to get a single source for quality control through quality circuit assembly. It allowed them to grab a larger need of their production stuff all with one customer. And what did it do to QCA? It allowed them to send almost $2 million worth of business to a sister company and wrap their customer up and keep out competition. And so that's what I mean. You got one company that does circuit boards, you got another company that does precision sheet metal, totally two different industries, but combined together, they present a very powerful and disruptive force into each of their both industries and segments.
Yeah, I just wanted to change gears just for a second and talk about your growth in 2018. One, how did you get there? Third quarter revenues were up 115%, as I mentioned earlier, compared to 2017. Just give us a little bit of rundown. How did you guys get there?
It's a really good question. Really good question. I'm glad to answer it. How about that? We really had, we have one of the things that we do at Alpine, it sets us a little bit of apart from our competitors as well, is we really focus on the needs to sustain profitable growth. And so we grew organically without our new acquisition of American Precision Fabricators. When you look at our other subsidiaries, they grew at 43%. 43% growth over the prior quarter, the prior year.
Absolutely.
Which is pretty phenomenal. But when you add the acquisition of American Precision Fabricators, 2018 grew at 76% growth over 2017, which is frankly quite remarkable. But more than that growth is really our business model, and that's really what we try to accentuate. We talked about the DSF, but how do you obtain profitable growth? And that's something that every business has a challenge to, or it can be a challenging for them. But here's our proof in the pudding of why we're growing not only on the top line, but 2019 is poised to have a huge influx of profit on the bottom line. All of our companies go through really what we call optimization and asset producing. They're either being optimized or they're what we call asset producing. Quality Circuit Assembly, they grew at roughly 29% last year over the prior year, and they became net profitable in 2018. And they threw almost $1.1 million to the bottom line, whereas the prior year they lost about $700,000. Well, that's a $1.8 million swing. How did we do it? They went to the optimization phase. We put them through the paces of strategic planning, profit and expense control, strategy planning, like how are we going to be different? We put a lot of effort into our marketing and sales department. But more importantly, we did more with less, meaning in 2017, they did roughly, I think, $8 million in revenue. And they, in 2017, they did about $8 million. In 2018, they did about $10.5 million in revenue. And from there, we only added 3 more employees. We're doing a large amount more revenue, and we've only added 3 more employees. How did we do that? We picked up operational efficiencies on the production floor. We were able to plan out our work better. The bottom line is they are optimized, and they're what we call asset producing. And we expect our other 2 subsidiaries, Altea and American Precision, to complete that optimization phase in first quarter of 2019.
My guest today is Kent Wilson. He's the CEO of Alpine Technologies Ltd. You can find him on the OTCQB under the ticker symbol ALPP. Spectrum EBOS. Also, I want to talk about Fort Smith, Arkansas manufacturing. Where are we at on those 2 spectrums?
Well, yeah, Spectrum EBOS, which stands for Spectrum Enterprise Business Operating System, is really an exciting development for Alpine 4. In 2017, I put the mandate out that we needed our own internal, really enterprise resource planning system. But beyond that, there really wasn't anything short of Oracle could do that. We didn't want to go out and spend the millions of dollars to implement Oracle, so we decided to develop our own ground-up enterprise business operating system, and it does 4 major things. It's an ERP, it's a document management system, it's a business intelligence piece so that we can run predictive analytics on our numbers, and it's also a collaboration tool. And put together, it really is designed to help us manage our subsidiaries, know exactly what the numbers look like, translate them into business directives, if you will, and push relative information to the front line so people know what they're doing. And it's all tethered around a blockchain-enabled ledger system. So you can trust the information that's coming in. We see a market not only inside Alpine 4 and all our subsidiaries to use, but we want to market this when we come out of our integration with our subsidiaries, put it in its own standalone company, and we see the market being the micro to small mid-cap companies that are public that need a viable alternative to Oracle and at a cost price that makes sense for a company that might be doing, say, $5 million a year all the way up to $100 million a year in revenue. And we think Spectrum is going to be a large dominant player in that market.
Kent, real fast, we only got about a minute and a half left on the show, and I want to get through a couple of things. Tell us more about the latest 8K filing on your acquisition of Morris Sheet Metal. Where are we at on that, quickly?
Yeah, we just finished our next acquisition. It's our first, what we call stabilizer. They've been in business since 1992, Morris Sheet Metal Inc. or Corp. and JT Spiral. They do 11 to 14 million a year like clockwork. And we're excited about it. It adds a piece of the puzzle for really our construction services type of industry that we're looking to get deeper into, and it really is our first stabilizer company in our business model.
It's been about a year since you've been back on the show. What would you want my listeners to take away from this interview?
Alpine 4 truly is the best of breed investment for all investors. You get the sexiness of our driver companies, you get the stableness of our stabilizer companies, and if you really want a company that's being innovative, which is the key to success for a long-term business, you need to have the ability to innovate, and our facilitator business model does that. So when you look at the DSF business model and you look at our stock price, I hope you see what I see, which is an undervalued company as far as the share price goes, and a company that has nowhere to go stock price but way up. And I hope that your listeners are looking at it that way. And if they ever have questions, feel free to reach out to me. But we think it's a great value, and it's a phenomenal company to lead.
Alpine 4 Technologies, company that we're highlighting here today on Stock Day. You've been listening to the CEO of the company, Mr. Kent Wilson. You can find him on the OTCQB under the ticker symbol ALPP. Kent, thank you so much for your time. All I ask is that you don't wait a year to come back on my show. Hopefully you'll come back on the next 50 or 60 days and give us an update.
You know what, Everett, that's a deal. I'll be on here. We'll get together in the next 30 to 60 days. How about that?
This program is entirely sponsored and produced by Uptick Newswire, LLC, which is responsible for the content. The opinions and information provided on this program are those of the guests and those of the respective companies they represent, and do not necessarily reflect those of the staff or management of Uptick Newswire. Uptick Newswire encourages all listeners of this program to do their due diligence and research when determining investment strategies that will work for them, or to seek the assistance of an investment professional. The guests of this program may have paid for its distribution and are not directly affiliated with Uptick Newswire or this station.